Welcome back. Still very, very quiet for our markets. It's been an extremely range-bound session. Let's pull up the European futures and see if we could get any kind of a support. Yesterday, they sold off. They were down 2.5%. Early indications are that it's likely to see a marginal rebound. So that's up about 0.3%. And for our own markets, volumes are on the higher side. We've done 96,000 crore up until now. But it's very quiet. So let's start with our personal finance segment and start solving all your queries. Harsh Roongta of apnapaisa.com is our expert today. And the first caller is Anjay Kumar, who calls in from Ranchi. Hi, Anjay.
Yeah. Hello.
Hi. Could you tell us your question for the expert on personal finance?
See, I wanted to know about how good my portfolio is made, and can you guide me on that?
Okay.
I have a term insurance of 59 lakhs.
Good.
And another Keyman insurance of 5 lakhs. I have in SIP investment in around 10 mutual funds to the tune of around 30,000 rupees per month. And besides that, I have investment in shares and mutual funds as of date around 22 lakhs.
Okay.
How much are you willing to invest on a monthly basis?
Say another 25,000 I can invest.
So you're already putting 30,000 SIPs in your various funds. You can scale it up to maybe 50,000. Is it?
Yeah, to 40,000.
All right, fine. I think that's details enough. Harsh, all yours. Insurance term policy, nearly 60 lakhs is the sum assured amount, and a bunch of mutual funds, 10 of them that he already is putting money on an SIP basis.
So I think two things. As far as your term insurance is concerned, Anjay, one, great that you bought a term insurance, but I think your needs probably are higher. The income that you had informed us, I think you need slightly higher insurance policy. Plus the premiums have dropped dramatically. So I think it might be good for you about a month before the current policy's renewal that you apply for a new one online. There are plenty of them available. HDFC Click to Protect is one. Aviva is another. You could look at the one that suits you and is available in your city. And make complete disclosures, you will be able to get a higher sum assured at a lower premium. That's as far as the term insurance is concerned. I think as far as your funds are concerned, what exactly is the goal? How far away is your goal, and what is your goal?
See, I have two daughters aged 15 and 12 years.
Right.
So for them, say for their marriage, I would be needing say around 1 crore each after 10 years and say 14-15 years.
So I think the key there, of course, is to, I think the fund details that you had given us, I think a lot of those fund details are, those funds are tax saving funds. They are good tax saving funds. But essentially, once the lock-in period is over, you might consider shifting them to better yielding equity funds over the long run. Your new investment, about 10,000 rupees that you're saying you would make, I would advise you to spread over 90% in equity, maybe 10% in gold. For gold, you have an SBI gold fund that you can put in. As far as equity is concerned, it will really depend on your portfolio, but some of the funds that you might consider is Franklin Blue Chip, ICICI Pru Discovery, Birla Dividend Yield Fund, or Reliance Equity Opportunities. Take two. You already have too many funds. I think your funds need a lot of review. At most, for 40,000, you should not have more than 4 or 5 funds.
All right, that's the advice, so that you can at least monitor those funds well, Anjay. Harsh, stay on with us. We have more callers lined up for you. We have to take a quick break and be back. Welcome back. We are still a few minutes away from the European opening. The data we are getting doesn't look too bad. Yeah, that's the June Consumer Confidence data for France. That's the European futures. There seems to be some kind of a technical bounce back across all risk assets, and the European futures are indicating just that. But we'll shift focus to those markets maybe after 10 minutes. Let's continue with our personal finance question answer session. This one is an SMS. Okay, it comes from Surendra Kumar Singh from Dhanbad. He says he can invest 5,000 rupees monthly. Wants to know how to allocate the money. A few more details about him. He wants in 3 years he wants a kitty of 5 lakh rupees, some of which he will use for his daughter's marriage. He has insurance, HDFC Young Star plan, and there he pays 60,000 premium for a sum assured of 15 lakh. Okay, he's aged 50. Current investments are in a bunch of mutual funds actually. HDFC Top 200, HDFC Equity, HDFC Mid Cap. Oh, quite an HDFC fan actually. Insurance and mutual funds. ICICI Blue Chip, ICICI Infrastructure and DSP Tiger Fund. Go ahead, Harsh.
Well, I think a couple of things. One, for the fresh investments. I think since the time period is 3 years, you can only take a dash of equity exposure. It will need to be primarily be debt, and I think what is called monthly income plans in the fund jargon, or essentially an 80-85% debt, 15-20% equity, those kind of plans are things that he should definitely look at. He can look at, since he is an HDFC fan, he can look at HDFC multiple yield fund there. That's for the fresh investment. As far as his existing ULIP is concerned, he's already paid the charges. I think he's been having this scheme for some time. The fund itself, the charges are all gone. Whatever he's paid are gone. The fund itself has not done too badly if you compare it with the Nifty, which is its benchmark. So it is in his own interest to continue investing in those funds, so that now he can take the benefit of the better returns and the lower charges going forward. Obviously he is underinsured, so he should, for the balance amount, he should clearly look at term plans that he can go.
Does he need to wind up any of the mutual funds?
I think so, because he has this thematic and infrastructure. He has this DSP BlackRock infrastructure fund, I think.
No, ICICI infrastructure.
ICICI, that he could probably shift to ICICI Pru Discovery, and he has DSP BlackRock Tiger, which he could probably shift to DSP BlackRock Top 100. He can keep the fund house the same but change the scheme.
All right. Thanks a lot, Harsh, for that advice. The broad advice being, don't keep too many funds, and certainly not sector funds if you are a retail investor. Well, a word to all of you viewers. If you have any personal finance questions, do write to us. Send us an SMS typing YM followed by a space and your questions.